Hi guys, welcome to TradFi and Bitcoin Club. Today's topic is STRC, the emergence of Bitcoin credit, and like how it can become the next financial layer. Uh, Basically, a bridge between the TradFi and Bitcoin. So, yeah, now coming to the most basic part, what STRC really is. So basically, STRC is a perpetual preferred stock. Now, most of you guys might not be aware of this term as well. So basically, if you like assume a scale of instruments which are available for a corporate company to raise capital, is basically on the left hand side you have debt and on the right hand side you have equity. So perpetual preferred sits in between of these two, so maybe perpetual preferred PP or just preferred stock sits here. Then we have like convertible bonds, and there are like various kinds of instruments through which you can raise capital. So perpetual preferred is one of the instruments which like strategy uses to raise capital and buy Bitcoin. Now coming to what STRC really is. So basically STRC is a ticker for strategies variable rate perpetual preferred stock. Now what does that mean? Strategy is a company. Variable rate, so the rate of dividends. Now as I was explaining here in the earlier side, let's say like in bonds you have coupons which needs to be paid like monthly, quarterly or yearly. In perpetual preferred stocks you have something similar called as dividends, but I mean, uh, it is not compulsory to pay dividends, but it is compulsory to pay coupons. If you are like if the company is not able to pay coupons, then essentially the company can go through the bankruptcy proceedings. So, coming to what is variable rate. So, for example, this preferred stock, when it was launched at IPO, basic IPO is basically initial public offering. So, whenever a security is listed on public markets like New York Stock Exchange or like NSE, BSE, they have to go through a process called as IPO. So, at the time of IPO, the interest rate was 9%, but throughout, like it was launched at the end of July, and since that point in time, STRC's dividend like kept increasing till 11.5%. Now why it kept increasing is because like STRC, the design of STRC, like the strategy wanted STRC to be stable. Like for example, the current price of STRC is around 99.88. So the goal is to keep the price in between this range. So $99 to $101. Why do we want to keep STRC's range um, at in this range? So basically, there is a good amount of capital which is not which cannot invest in a volatile asset like Bitcoin. As you know, like Bitcoin was around 126k $1,000 in like 126k in I think October or November, and now it is trading around 72k. So this volatility can't be digested by most of the people, So for example, like I can draw here. So most, like if you imagine there's a world with 1,000 trillion total wealth. Like if the total wealth in the world is 1,000 trillion, then approximately 350 trillion sits in real estate, around 300 trillion sits in bonds, and around like 120 trillion sits in money like dollars, INR, or like similar instruments like money market instruments and all that thing. So out of this 1,000 trillion, like if you can calculate 300 plus 350, like or like exclude real estate, 300 plus 120. So nearly like greater than 40% sits in income giving instruments. So bonds give you income. Money is stable, but in money you can have like money market funds which are highly liquid and also give you income. Like in US, the US treasuries yield 4%. US treasuries, so it's a government bond which yields around 4% short term. And bonds also in the US, I think they yield around 6 to 9%, depending upon the risks which they have. And why I mentioned real estate here is basically out of the 350 trillion, I'm like, it's my guess is most of the real estate is held as a second home or a yield generating real estate. So, I mean, even if we assume 50% of this 350 trillion, then it comes around like 175 trillion. So, what you can see through this is the point I'm trying to make is like 300 plus 120 plus 175. So, 420 plus like 175 is comes around nearly 670 or nearly 600 trillion. So if this 600 trillion of money wants 600 trillion of money wants stability and yield, but with Bitcoin these two things can't be achieved. So that's why Michael Saylor, the chairman of strategy, invented this, or we can say reinvented this STRC product via like, I mean, removing the volatility of Bitcoin by over collateralizing it. So how was this structured is basically, for example, let's say as of now, if STRC is $5 billion, then the Bitcoin backing STRC is around $20 billion. So it's highly collateralized, over collateralized. So because of this, what happens is the volatility of this product comes down, and also it is paying very much higher interest rate. So if you see in the traditional financial world, the like these kinds of interest are not easily achievable. Like bonds yield you around 6 to 7%, money markets yield around 4%, but STRC is yielding around 11.5%. So because of this, like um, this is targeted for the people who want income but do not want volatility. So, but also believe in Bitcoin in some kind of sense, because Bitcoin has become like a couple of $1 trillion. I'm sure, I'm not sure what exactly is the current market cap. I think it should be somewhere around 1.5 to 2 trillion. So, to the people who believe that Bitcoin is not going to zero, but it is going to exist, so that people can trust STRC and get 11.5% paid monthly. So this 11.5% yield is per annum, but dividends are paid monthly. Now coming to, like I already explained, like why did this instrument needs to exist is basically investor demand. Like there is high demand from investors which is looking for income, and the current income is very low in TradFi world. Like in as I was explaining, in US you get 4%, in Japan you get like 0 to 2%, in Switzerland you get 0%, in EU, most of the EU nations, you get 3%. So as the world's population is aging, they require income to like sustain their lifestyle. But because of the current financial world and what it's going through, the higher yields are not sustainable in like the TradFi world. Um, as there is in like demand for income, what is seller doing? Seller is issuing STRC and giving people 11.5% paid monthly. So what's happening is you can ask that how, from where does this 11.5% come? So basically the understanding is, if Bitcoin delivers around 30% CAGR, basically compound interest rate or compound annual growth rate in the long term, the first 11.5% will go to STRC shareholders or STRC holders, and the remaining will go to equity holders, which is MSTR. So basically, MSTR is the common stock and STRC is the perpetual or preferred equity. So the extra basically the spread will transfer to, like 30 minus 11.5 will transfer to MSTR, and that's how MSTR will tend to outperform BTC in the longer term. So what does the STRC do is, basically whenever seller sells STRC, then he directly buys BTC into balance sheet, and this flywheel keeps continuing. Now most of you guys are aware about Bitcoin, but like, to give you a mental model or to give you a comparison, Bitcoin is like highly volatile asset as compared to STRC. STRC goal is to keep trade around $100, but Bitcoin is highly volatile. It can go up, come down 30% in a matter of months. So this is one of the difference. In Bitcoin there is no yield, but in STRC you can generate 11.5%. um, Bitcoin is basically a pure monetary asset, so it's cash. As you all know, cash cannot generate yield. So this is one of the point. Then Bitcoin, you can self custody it. It's censorship resistant. But with STRC, you have to trust strategy, basically the issuing company. So if you do not trust, then like, be in Bitcoin. But if you want 11.5% per annum paid monthly, then like, if you are looking to trust strategy as an intermediary, then it is a good option to like, if you are having monthly expenses which you need to do and you don't want to sell your Bitcoin, then it makes sense to keep a part of your portfolio in STRC. And like, this 11.5% is also ROC. So basically these dividends are ROC. What does this mean is return of capital. So the tax is 0% for most probably strategy as expected to it around 8 to 10 years. So in this time frame the dividends will be ROC. Then giving you some numbers about STRC, what has it achieved. So the IPO, it was 2.5 billion, so 2.5 billion were raised it was like the largest IPO in the whole of US history. US history. So none of the IPO raised $2.5 billion. Then at the IPO they acquired around 21,000 Bitcoin, 21021. So numbering game is going around here. Um, the current notional outstanding as of like I made this PPT on March 9th. It was 3.84 at that point in time, but as of today it's around $5.02 billion. So from March 10 to March 16, strategy raised around 1.2 billion simply from STRC. So this was the one of the best weeks since IPO, where strategy was able to raise like uh, cash and buy Bitcoin. Some more numbers I wanted to give before going is USD reserve. What is this basically? So this USD reserve is in cash or in like US Treasuries, money market funds like US Treasuries. So it is not in Bitcoin, it is pure cash like US dollars. So for example, why strategy has decided to keep STRC in like 2.25 billion in US dollars is basically like they have to pay dividends of around 11.5% per annum. So like this 2.25 billion currently covers 2.1 years in time frame. If you look in time, like if the number stays at around 5.2 billion, then this $2 billion of USD reserve is can cover 2 years. So if Bitcoin went into bear market and strategy cannot raise any more money, then they can simply pay dividends via this dividend reserve. Then what is cumulative distributions? This is total cumulative distributions made by strategy since their other products. So not only STRC, but it includes all the family of prefers like STRK, STRF, STRD, and STRC. So till now they have paid around $400 million in dividends. Now coming to part two. Till here, if there are any doubts, you can ask. But if not, then we can continue in part two. Okay, I see there are no doubts. Okay, now continuing to part two is now what has happened is institutions are going big on STRC adoption. So like institution, now what do I mean by institutions is basically other companies, like maybe so there are a couple of examples in coming slides, but because of the nature of STRC, it has become a good product for other companies or other like corporates to hold as a substitute of cash. So because it is yielding around 11.5% versus 4% US Treasuries, it has become a good substitute. Like let's say you are a corporate company and you hold like US dollars or US Treasuries in your balance sheet. Uh, a part of your like cash which you hold in the company can be converted into STRC, which is yielding you 11.5%. So this is one of the like use case for corporates. Then yield enhancement. So what I was explaining to you before is the bond market is nearly 300 trillion. So, like this perpetual preferred stock um, can be included in like in the portfolio, but Bitcoin cannot. Like it's the mandate for them. Like they cannot invest in Bitcoin, but they can invest in STRC. So there are couple of portfolios where STRC has now been started to get include. Like we have examples in the further slides. Then coming to institutional category, fit is basically uh, like all the terms which I mentioned, 11.5% yield, perpetual preferred stock, and whatnot, these are very much friendly to TradFi people. So people coming from traditional finance, they know these terms as compared to Bitcoin terms, which we talk about, like block time or um, like the chain of transactions or the other words which we have in Bitcoin. Most probably the TradFi people are not aware of these terms which you use in Bitcoin. Then capital preservation. So because it is yielding 11.5%, your capital can be preserved for a longer time as compared to other instruments which are like available. Then this is what all of this is causing is uh, STRC is acting as a bridge between the financial world and BTC. So it's kind of a bridge. Um, has anyone like unmuted? Do you want to ask something or yeah? Okay. Now, the examples of some treasuries or some corporates who have adopted STRC in their balance sheet. So there are a couple of energy companies like Prevalon, Prevalon Energies. So they adopted STRC in their cash equivalent category. So they kept some percentage of their cash holdings in STRC. I'm not like I couldn't find the exact number, but it's something in nine figures, which the CFO of that company mentioned. Then a federally chartered crypto bank called Anchorage Digital, Anchorage Digital. They also included STRC as a cash reserve in their balance sheet. Then there is one of the Brazilian Bitcoin treasury firm who has Bitcoin in their balance sheet, known as Orange BTC. Orange BTC. They also included STRC in their balance sheet. Then one of the largest um, one of the largest players in STRC is basically Strive Asset Management. So it is also one of the US Bitcoin treasury company who are keeping Bitcoin in their balance sheet. But with Bitcoin, they also keep cash and for running the company expenses. So what they did is they kept 50 million. So they right now have $150 million. So around one third of the company cash reserves are transferred to STRC. So because of its nature of similar to money market funds and low volatility. Then basically the case study of Strive, as I was telling, is they allocated 50 million. Like it is currently trading at $100, so they acquired 500,000 shares, and like one third of their total treasury sits in STRC. Then the CEO of this company, Matt Cole, compared STRC to money market funds, which will give other CFOs a direction to like see STRC as in comparison to the money market funds. So it is one of the thing. Now coming to the fund ecosystem. So STRC was included in PFF. What is PFF? PFF is basically a preferred shares fund, which allocates around 1.46 to 1.48% of the total AUM. Approximate exposure is around $207 million. So in the US, the preferred market or the preferred equity market is around couple of trillions. So this PFF tracks the US preferred market. So because of this, like in this, STRC has been included and it has got around 1.46% of weighting. So it comes around $207 million. Then retail and like the investment advisors, RIAs, have got exposure through Robinhood. Robinhood is one of the retail friendly trading platforms. STRC also listed on it, which gives you access to stocks very easily. Like it's not very complicated like IBKR or other traditional brokers. Then there are other couple of funds. Uh, then this was about the institutional adoption of STRC. Now coming to the part 3, where people are seeing STRC as an infrastructure layer and they are building on top of STRC. Now, like there is one, what I can say, one portfolio manager or one a fund or one AMC asset management company called 21 Shares. So 21 Shares is European company which basically it's a European AMC asset management company. What they have done is simply they have launched an ETF which is 1:1 backed by STRC. So it like it further eases STRC adoption in European markets. So the ETF is listed in Euronext Amsterdam Exchange. So the fund or the funds which are only able to allocate in European markets, they can access STRC's exposure through these European exchange ETP exchange traded product. Then one of the thing which I found really interesting is this P1 Hope Money Market Plus Funds. I think I have a separate slide. Yeah. So it is one of the very interesting product which I saw being developed on top of STRC is basically uh, this is a money market fund, but what they have done is they have kept 90% money market fund traditional whatever instruments which you have like US treasuries, European treasuries, Japanese treasuries, so all of this, and 10% they have allocated to STRC, and they have created a new fund called as money market plus fund. So I will come to that uh, before going to the discussion. Now STRC has also has been launched on chain, like on chain wrapper STRCX for digitally, like it has been launched on chain, so you can buy STRCX on chain directly. Then there are a couple of coins which have been launched on top of STRC, like stable coins. So these are stable coins which yield around 10%. For example, USDT is a stable coin by Tether, but it yields nothing, like it yields 0%. But say Saturn, APYX, Buck, they have their own stable coins which yield around 10 to 10, 11, 12%. So how are they able to do this is basically they have taken STRC in their balance sheet, and basically 80% STRC, 20% US Treasury. So they are doing these kinds of structured, um, like like structured management, where they are like cutting down STRC's last 2 to like 10% volatility and giving giving crypto people access to 0% volatility and 10% yield. So this is one of the on-chain products out there. Now, coming to the one of the most interesting parts of like my, or you can say like my favorite part, is basically this P1 money market plus fund. So it is one of the I can say it is one of the AMC which does this money market funds. What they have did is they have kept 90% in money market funds, and they have kept 10% in STRC. And because of this, what they have engineered is pretty like commendable. Because for example, I am in TradFi. I don't know what STRC is doing. I don't care literally, because like nobody wants like they are doing their work. They are okay to yield 4.5% per annum. But with integration of STRC into this money market plus funds is building a very interesting product for TradFi people whose risk taking capability is much less. Like if you want to invest in STRC, still from a traditional financial perspective, still you are taking some risk. But with money market plus funds, basically 90% is invested in US treasuries, Japanese treasuries, European treasuries, and all that kind of stuff which is in TradFi. But with only adding STRC as 10%, they are able to generate extra, like this spread 6.8 minus 4.5. So 8 minus 5 is 3, and 6 minus 4 is 2. So extra 2.3% spread is they are able to generate by just including STRC in the fund, and naming it as money market plus fund. Now the volatility, by including STRC, the annualized volatility has only gone up by 1.8%, which is like still very good. I mean, the funds who take positions in, or the kind of money which takes positions in money market, is basically like insurance companies, or like pension funds. So these guys have low risk kind of capability. So that's why integrating STRC into this money market kind of fund has made these product like STRC a very good sense, because like the volatility is going up only 1.8%, but the annualized yield is going up 2.3%. So it is kind of win-win for the people who come from traditional financial space and do not want to directly go into STRC. So it's kind of a bridge between STRC and the TradFi world. So I found it very interesting out of all that happened in strategy world 2026 conference. So all
Yeah.
of this which I'm, yeah, Bala, do you want to ask
Yeah.
something?
In some of the products that you showed earlier, where are they available? Like, which platforms?
These which one specifically are you talking about?
I think like STRC, this on-chain yield, like
Ah,
PYX.
yeah, yeah. So I think they are available on maybe exchanges. I have not like literally gone through, but if you like go on the X accounts of these Saturn or APYX or Buck, they have it listed on their own websites. So in case of Buck, I think they do their whitelisting process. If you want to invest in Buck, then in case of APYX, I think you can get it in some of the decentralized exchanges. Same case in case of Saturn as well. So Saturn is USDAT, APY USD. So this APYX has APX USD and APY USD. One of them yields I think 12% and the other is I think just a stable coin which yields nothing. So there are a couple of things which are available right now if you go on some decentralized exchanges, or you can just go on the websites. Maybe I can show the websites like after the discussion. But yeah, these products are available right now.
Okay, thank you.
Yeah. Then coming to, I think I discussed this part. Um, so all of this which I am showing you guys is basically from this Strategy World 2026 conference. Here, everything was explained. How are things being developed on top of STRC. So this is kind of recap. So STRC is no longer just a US security. It has been listed in Europe with 21 shares. It has gone on chain with tokenized assets like STRCX, then APYX, Buck, and other like Saturn and other protocols. So yeah, now thinking STRC from corporate balance sheet perspective is because STRC is yielding 11.5% per annum, it makes a good sense for corporate treasury which is into Bitcoin. Maybe it is buying Bitcoin in the balance sheet, or maybe it's not. But like having an STRC exposure in your balance sheet makes a lot of sense because the 30-day volatility of STRC I was seeing just before the session, it has dropped to 1.5%. So um, the adoption of STRC is happening like in bear market, having volatility of the 30-day volatility of 1.5% is commendable. And also it is around 4.5 times over collateralized. So what does this mean is basically $1 of STRC is backed by $4.5 of BTC. This makes a case for the corporate treasuries or for the CFOs who are reluctant to adopt Bitcoin in their balance sheet, but they think that Bitcoin is something which is not going to go to zero, which is going to stay here. Like so for these CFOs, like for example, if you want to take Bitcoin in your balance sheet, you have to convince whole board about, you have to educate your board, you have to talk with your like investors, like, hey, I'm going to like take Bitcoin in my balance sheet, what do you think? It's a whole educational process which you have to go through to just take Bitcoin in your balance sheet. But in case of STRC, because it is a publicly traded instrument which is listed on NASDAQ, it is much more simpler for the CFOs or the traders to understand I'm sorry, guys. I think I lost you in between. Uh, Quickly resharing my screen. I'm audible, right?
Yes, yes, you're right.
Yeah. So till I set up my screen again, if you guys want to discuss something, like feel free because I think it will take a couple of minutes for me to set up.
So broadly, like if any company were to w- had money in their balance sheet, cash
Yeah,
flows
correct.
lying with their treasury, they are better off holding Bitcoin than buying STRC. Um, but like, does it make sense for them to time purchases of Bitcoin, looking at the cyclicity, for example, like hold in Bitcoin and then bear run, convert that Bitcoin into dollars, and then buy STRC, or or what do you recommend? Like, I think for most companies which can hold Bitcoin and they're convinced they should hold Bitcoin and manage their expenses, but companies which are not convinced to hold Bitcoin in their balance sheet or the board has not approved, they can probably go and invest into it STRC.
Yeah, basically, like for me, it's not either or. Like either you are buying STRC or either you are buying Bitcoin. You can buy Bitcoin, you can buy STRC. But for the people who are like who don't have any idea what Bitcoin is, I think um, or for the people who think that Bitcoin is something, but we do not want to like keep it in our balance sheet, but we believe that Bitcoin is not going to go to zero. So for them, I think STRC makes sense because instead of keeping US Treasuries, STRC is yielding you 11.5%, and it's also like highly liquid, like the trading volume which STRC has is around I think like $200 million per average for the 30-day average trading volume is around $200 million. So for me, I think uh, it depends what kind of a person or what kind of a company you are. It can be a step towards Bitcoin where you buy STRC or keep STRC in your treasury first and then look into Bitcoin. For example, or there's one more case. I think Saurabh, you missed the earlier part where there's a treasury company named Strive in the US. What they have done is they had around $150 million in cash or in like money like instruments which they required it for paying dividends or let's call it dividend reserve. Out of that 150 million, they allocated $50 million to STRC. So all the risk analysis and what will happen, all the financial modeling around the scenarios of Bitcoin bear market, like STRC certainly fits some percentage in a particular corporate's balance sheet, if not a large amount.
I think you have discussed this earlier, but I'm just harping back to the point that there is a possibility of offering digital credit, like not digital credit, but it is possible for banks to partner with MicroStrategy and have it available in corporate accounts, right? So that anyone who's opening, say, a bank account and is managing funds with a certain bank, the banks can deploy that capital into STRC and earn that yield. uh, is it is it not a better idea And I think this is something that you talked to me when you had met Michael Saylor. But is it not a better idea for Michael Saylor themselves to become a bank which can allows corporates to open a bank account with them and deploy that capital into STRC and give them yields, like go full stack rather than just being.
Yeah, it's a like a great idea for them, but I don't know like if they can secure a banking license and uh, I mean there might be challenges for sailor to get a banking license and uh, run
They have
whatever.
they have 800,000 bitcoins, and it's the most Bitcoin friendly like regime right now in US, right? Bitcoin friendly government in US.
But I think one more thing which we have not thought is the risk weights. I did a session maybe a couple of weeks back or last week. Last week, what did we do? Okay, let's forget. But the for banks, the Bitcoin's risk weight is around 1 to 50%. So, for example, if I am a bank and I want to hold Bitcoin in my balance sheet, even if I am holding it for my customer, still, let's say I hold $100 million of Bitcoin for XYZ company, then uh, it's their Bitcoin, but still I have to keep aside another $100 million. So, with the current rules and regulations of basically the risk weight which Bitcoin has been given, it does not make sense for a bank to like even if I am like having it for my customer or giving them a custody solution. So uh, I mean, the idea which you have is great, but the current regulations and all are still with they have like the most friendly, Bitcoin friendly, or I can say crypto friendly government. But still, there are some rules which needs to be changed, like this Bitcoin's risk weight and all that stuff, which needs to be changed. I think it will change over time, like we discussed a session on SAB 121, which said a similar thing to this. So this got rescinded, but this thing is still there. So unless and until things like regulators make it easier for people, for banks to custody Bitcoin, it will take some time. But yeah, to your point, I think it makes sense for strategy to go all in, like become a bank. But I think it will take some time.
What's with Kraken getting a Fed master account?
Yeah, I have not like dabbled into that, but I think it's worth going into that direction. I'm not like I read they got some kind of banking license and also they got Fed wire or some. They basically got closer to the printer. So I read the news, but I have not went into that hole.
But isn't it like why Kraken? Why not Coinbase? I don't know. I have also not read too much into the news, but
Yeah.
yeah, these things
Hmm.
came to my mind. And
Yeah, true, true. I think in the back end they are pursuing banking licenses, but Kraken is the first one to get whatever they have got. We'll see couple of other players as well, maybe in 2026 or in 2027, getting these licenses. So yeah, okay. So now coming to the last part, risks, trade-offs, and what the future outlook basically. So some confusions which needs to be clarified is what STRC is, what is not STRC. So STRC is not Bitcoin backed cash. equivalent. STRC is a perpetual preferred stock, so it's STRC is not a bond. So do not confuse STRC. Like these terms can be called out, but if you ask me literally, then it's a perpetual preferred equity which will behave similarly to cash equivalent. But yeah, then one more thing, like no direct BTC collateral. So I mentioned a couple of times where I said $1 of STRC is backed by $4.5 of STRC, but there is not a direct covenant which is linking STRC with this much amount of Bitcoin stack. So if you want, like you can go to strategy.com/credit, and there you can see that convertible bonds are the first who in the event of bankruptcy which will get paid. Then comes STRF, and then comes STRC. So these convertible bonds are around 20 times over collateralized. Then STRF comes around, I think, 6 times, and STRC becomes 4.5 times. So this is basically the current balance sheet, what I can say, balance sheet perspective. But yeah, coming back to what STRC is. Now, STRC does not guarantee a monthly income because it is dividend and not coupon. So I have talked multiple times that STRC is a very great product, but because of I said something, don't go and directly invest, do your own research. Basically, STRC give dividends and they are board declared, they can be suspended. Then price will always stay near par. It is what Sailor has designed to do, but it might not stay at $100. So this is one of the risks. Then pure Bitcoin exposure, it's not like investors are holding issuer credit. So basically you are holding a paper issued by Strategy, and you are trusting Strategy as a company. So there are multiple layers. Then as it is I mean the myth. I mean the slide, the points which are mentioned here. These points can be talked with relation to STRC, but underlying, when you go deeper, you see that it is not as people talk about it, but it is very close to whatever these terms are. So STRC sits in the intersection of multiple systems that concentration also concentrate risks. So strategies, concentration risk, all those things are there. Then what are the key risks? Basically issuer and credit risk. Dividend are discretionary, they can be suspended. Structural risk. BTC is not direct collateral backing, as I was explaining. Then market risk. Basically, the dividends are, if you go deeper into the capital structure of Strategy, dividends are not paid by selling Bitcoins, but they are paid by selling MSTR. So basically issuing MSTR ATM. Then if market conditions are not conducive for issuing MSTR, like let's say MSTR goes below 1 times NAV, then it becomes dilutive to shareholders. So what to do? For this, they have around 2.25 billion of USD reserve, but yeah, it covers around 2 years worth of dividend. But what if Bitcoin goes into 4 or 5 years of like a bear market? Then in that case, they might have to sell Bitcoins, or they might also can stop dividends. Then operational and regulatory, what regulators can do, we cannot predict. Then scale, like basically STRC is becoming much more what I can say, much more larger stack in all of the Bitcoin's balance sheet. I think the total convertible bonds is 8 billion. STRC itself is 5 billion. STRC is becoming bigger part of the stack. So that is one of the risks which will come through. Then this is my personal thing where I predict what might happen is treasury adoption. Like a, a good number of corporates can adopt STRC in their balance sheet, similar to the ones which I discussed earlier. Then other ETFs like 21 shares, or maybe we will see leverage ETFs, leverage STRC ETFs, which will give you 2 times STRC or 3 times STRC. We can see that kind of products. Then uh, like the ETF rebalancing, because STRC's market cap will continue to grow, the ETF rebalancing, which is currently at 1.47%, this number will keep continuing to grow, like which I discussed earlier in the session, the PFF, a perpetual stock fund, which is there in the US. So the weight in these ETFs will gradually keep increasing as and when STRC's market cap increases. Then long term, I think strategy currently has B minus issuer credit rating, but in the long term, they can if they can get a rating for specifically for STRC, then it might be good for the product, because there are two types of rating. One is issuer rating and other is the product rating. So if the product has got A plus or triple B minus, recently I did a session where like the Leden, they did ABS which they listed publicly, and they got triple B minus credit rating. Basically this is an investment grade credit ratings which unlocks much larger pool of capital from the traditional financial world. So doing all of this will make sense in the next 12 to 36 months. So yeah, I think basically Bitcoin is the reserve asset here, then STRC comes on top of that, and then on top of STRC we are seeing the different assets we're getting built, like ETFs, treasuries are adopting tokenized coins, or wrappers are coming up. So yeah, that's the session. The floor is open for chat.